Welcome back to another episode of the Revere Weekend Roundup hosted by myself and Ted. Hope you guys are having a good weekend and happy Mother's Day to all the moms out there. And with that, we're going to dive straight right into the markets.
Yep. Thank you, Connor. Let's dive right into it. So after this week's actions, we have the trend gauge here with green arrows for everything. Market leaders up, short term over the 21 EMA now, medium term firm break and living above the 50 simple moving average, and then the long term stays the same above the 200-day simple moving average. So let's first take a look at the S&P 500. As we noted last week, we had a change in character when we closed above the all-time high anchored VWAP for the first time since this pullback slash correction. And after that, we had four nice up days, followed by this just pretty neutral day last Friday. And that's expected as we come into this gap up bearish engulfing bar that we had on volume. So it makes sense that we have to stall a little bit here and continue to build out this right side. Pretty much the action is the same for the other indexes, the NASDAQ mid caps and small caps. Looking forward to this week, a huge event that we're looking for, or two events, is PPI Tuesday and CPI Wednesday. And with the markets right now being quite bipolar, trading on every economic piece of data, PPI and CPI will be very telling on how sticky inflation is, and then the market will project what the Fed will not do. So here's the cues, pretty much same thing coming into this bearish engulfing gap up bar. Mid caps as well starting to stall, and again, just looking at the weekly, it's kind of V-shaped. So our expectations is that, and it actually be really healthy, is to see us back and fill here, back to these key moving averages and this anchored VWAP, and just continue to build out and make this right side of the base more symmetrical. IWM, you can say the same thing. We also see a potential head and shoulders here, with this being the left shoulder, this is the head, and this is the right shoulder. But again, it can go either way, because if you zoom out, it kind of just looks, it's just a stage one base struggling to break into stage two and just having a little bit of noise on this right side here so far. Quickly, the Dow, pretty much the same picture as the other indexes as well. One thing to note as well is the VIX had a spike, but it's plummeted so far all the way back down to very low volatility levels. The dollar, we broke down and then we wedged back to the 20-day simple moving average, and so far we're just chopping around. It is good to see that the dollar is staying mute right now, even though the weekly looks quite bullish. Gold and silver, really nice moves higher off the 10-week and back above the 10 and 20. Silver as well, successful weekly based breakout retest. Now some tennis ball action, almost back into new highs. Copper barely even pulled back, still far above the 10-week, and it made new highs as well this week. On the inflation expectations front, it is nice to see crude oil living below the 200-day now and actually rejecting it once again on Friday. Gasoline has come off a lot as well, now living below the 50-day. So that's definitely a good sign, as gas prices and oil prices are a big part of the inflation for the ordinary consumer. In the interest rates in the bond market, pretty much not too much this week, just chopping around, a little breakdown, but pretty much where we are from the beginning of last week. We definitely don't want to see these rates tick up and break out again. That would definitely put more pressure on equities. And then finally, in this general market section, Bitcoin is still holding the lows of the base of around 60,000. As you can see on the weekly, the volume has started to really dry up. So to me, that indicates that sellers are really stopped coming to market. Right now on the monthly chart, we have about 3 months of basing. This looks like it could turn into a 4 to 6, maybe 7, 8 month base, and that would really align for a fat pitch later on. Quickly, we'll just go over some breadth as well. Since that May 3rd wedge pop above the 50-day simple moving average on the indexes, the Purdue Market Monitor also started turning green on these two gauges, which is the main, I guess, green light, red light for trading strength and breakouts. And for 6 days now, it's been green, but we saw some selling in the number of stocks down 4% plus last Friday, with both of these numbers almost at the same levels, which means we're pretty much in a neutral territory here. And that's kind of reflected in the picture of stocks as well, with some stocks falling through, some seeing breakouts and squats, and some even seeing complete failures. We've also seen a numerous number of earnings blowups too. So the market is definitely not forgiving for bad earnings reports and forward guidance. In net highs and lows, pretty green picture, persistent net highs across all time frames. And to zoom in a little more, we saw persistent net highs in the New York Stock Exchange, and it actually expanded this week too as we made this move higher. So that is healthy. The Nasdaq just crossed net highs as we made this move higher above the 50-day. We definitely want to see this improve, especially if we break into new all-time highs. Nizzy Nazzy, I talked about this on the podcast Friday. One thing I noted was a lot of people are comparing this current pullback and correction to that August through November correction. As you can see, let me just zoom out here for a second, just to review it quickly. In that August one, we already had a rally in the Nizzy, and then we were breaking down, while this time we sold off in the Nizzy and we're breaking out upward. And the picture is the same for the Nazi. Let me just switch time frames. As you can see right here was that August period, and here is the current period. CNN Fear and Greed, another pretty nice thing is that we just moved into neutral territory, whereas in that August rally I noted on the podcast as well, if you want to go check that out, we were already in extreme greed. So if we do get that back and filling like I talked about, perhaps sentiment dips back into fear, and that would definitely give more room to run to the upside if that's where the markets resolve itself. One thing we don't want to see too much is the bullish readings in AAII, which is at almost 41% now, above historical averages, and bears dropped to 24%, well below historical averages, as well as the NAM spiked up tremendously this week. We don't want to see this come up too much, because then it doesn't really leave a lot of juice left for a rally that we all hope for. I think that is it from the general markets breadth and sentiment. Connor, do you want to take it away with your sector's breakdown and earnings?
Yep. Yeah.
Alrighty.
So you can see my screen, right?
Yep. Yep.
Yep. So after the weekend screening, not seeing a ton of stuff, and Ted will cover later. It's a busy week. We have PPI and CPI, so still being cautious, but some sectors that I like. KBE, that's the first one. This is the Spider S&P Bank Index, and if you look at this here, this has got a 20-week flat base setup. Looks very constructive, and if this can break out, that would be positive. And as we've been seeing, financial related stocks have been leading. XAR is another one. This is the Aerospace and Defense ETF. It's coming out of another flat base, and this just recently broke out of this 3-year range. And with all the war stuff going on, these aerospace and defense companies are poised to do pretty well. And if we look at HWM, this is a leader in the group, and look at it gapped up out of the space on earnings and has just been trickling higher. So investors are buying these stocks, and that's evident in the price action. And then non-conventional one, XLRE, this is the real estate ETF, and it's setting up a double bottom base on the weekly, and I'll be watching this one through that 40 pivot. If rates come down, this sector often outperforms. And with this sector, we have ITB, which is the home builders, and this has held up really well. And the leaders, Toll Brothers, PHM, these type of names all have really good charts. So if rates come down more, these stocks in this area of the market might have some more juice. So those are 3 sectors I'm watching. And now if we just dive into, I've got 14 names that I'm watching, and I'll just walk you guys through what I'm seeing. So first name, Dutch Bros. This had a huge change in character on earnings. It's breaking this resistance here and huge volume. Um, Sales are up 39% and a big increase in earnings. And this has a nice moving average launch pad look. So I'm watching this one for a drift lower to form the right side of a cup of the handle, sorry. And this could be a good one for further upside. And another thing I really like is this is in the retail restaurant sector, and these have been some of the best performing stocks lately. MU, just, super strong stock. It had that big earnings gap up before, bounced off the 50-day. Now it's forming, a tight 5-day pivot through about 122. STX, this is found this name this weekend. This is a computer data storage stock. Um, it's coming out of this double bottom base. All the moving averages are stacked on top. And if you look at the weekly, this was the stage one base breakout, and this looks like the first, double bottom base after that stage one breakout. So watching this one, CPNG, this finally gave an opportunity last week. You can see here it pulled back to that high volume close and found buyers immediately. And I'll be watching this one for ads with confirmation of the upside. And when you look at this weekly, just broke out of this stage one base. So I do not think this one's extended at all. Avgo, if chips are going to bounce, I like this one a lot. It has that moving average launch pad look as well. And it's consolidated nicely, 48-day base, 17% depth. And this one tends to perform well when chips are in favor. APP, I've talked about a couple of the earnings gaps, but this one continues to perform. It gapped up again last week on earnings, and it followed the next day. It had a tight inside day. So this one's just going to stay in focus. If it drifts lower to like the 10 EMA or it takes out those highs, this name's very strong. NVIDIA earnings in 10 days looks really good. I mean, it's hanging in there. So it's the big market stock. So always keeping an eye on that one. ServiceNow, this is a pullback buy. This is pulling right back to the 40-week moving average. It found support perfectly back here and led to a big run. And now it's holding that here. So I'm watching this one, and I'd like to see some more upside volume and a stronger reversal. But for now, that's the line in the sand right there. TMDX, this is continuing with the theme of strong earnings gaps. TMDX, in my opinion, is one of the strongest stocks in the market right now. Had that huge earnings beat, sales, I mean, everything. It was perfect. And this fits the bill, with only a $30 million float. So I'm keeping my eye on this one. The 10 days finally catching up, and it's forming a high tight flag. So those are very powerful patterns. Pure Storage, this one's still in a double bottom base. This computer data storage industry group is strong, and it looks good over this 5509 pivot, and the weekly looks really good as well. And then Toast, again, with the earnings breakaway gap on earnings. And when you look at the weekly, I mean, this is a pretty textbook stage one base breakout. So no, the saying, the bigger the base, the higher in space. So we'll see if this can fall through, but it had the volume. And for these earnings gaps, I'm looking at a few things, right? Like if it can form a couple of tight days in the upper range of that earnings gap candle, that can be good for continuation. Or you can look for a pullback entry to, the 10 EMA. And then I don't have this on MarketSmith, but I use it on my other charting software, is using an anchored VWAP from that gap day can provide super good entries. In the strongest earnings gaps, they respect that anchored VWAP the whole way. So in our studies, we've noticed that. And then, I talked about China stocks the other week, and PDD had that huge move up on volume, and now it's forming a tight consolidation in this handle. AA, This is an aluminum, mining metal stocks. This has got a really nice flat base, and these stocks have been acting well. So keeping this one on watch. And then last one, like I mentioned with China, Futu was one of the first to break out, and now it's pulling back to the 10-day moving average. So we'll see if this is offering an opportunity and see if it can have an upside reversal off these levels. So those are for the names and sectors I'm watching. And then here's the earnings calendar for the week ahead. Not a ton of big tech nor growth names reporting this week. So if you guys want to pause this and look at it, I'm not going to go through all the names, but yeah, we're always know your earnings dates and be aware. And again, with similar names in the sector can affect your stock as well. So just always make sure you're aware of who's reporting when. Yeah,
Alrighty.
Ted, you want to
Yep.
take?
I'll quickly go over the economic calendar. As I mentioned, 2 data points, PPI and core PPI Tuesday, and CPI and core CPI Wednesday, with jobless claims Thursday. And those will be really important just for inflation expectations and the inflation picture going forward. And then finally, Connor did all the stocks and sectors. I'll just quickly talk about Perplexity, which is a new AI generative model that I am using. I've been using ChatGPT for over a year and a half. I've tried Google's Gemini, and I've also used Anthropic's Cloud for a little bit. And I've heard about Perplexity, but I watched a Stanley Druckenmiller CNBC video or interview, and he was discussing how he was astounded by this model. He said his younger partners and analysts were telling him that a lot of people on the West Coast in Silicon Valley and the tech sector started using Perplexity over ChatGPT. And the reason why is Perplexity differentiates itself with real-time live search, which no other model, as far as I'm aware, has. And it's just extremely powerful for anything we do in trading and investing. And Druckenmiller even said that 95% of his searches are on Perplexity now, like not even using Google, which was huge in my opinion. So I just want to show a couple things I've used it for. Um, for example, I just typed in what does TMDX do just to understand TMDX more. And what it does is it searches the entire internet, scrapes it for sources. As you can see, you can click on each one of these sources as well to look deeper into the stock. Like it pulled Seeking Alpha, it went on to Yahoo Finance, it went to Motley Fool, even the Transmedic website itself. And even look, Jonah Lupton's growth stock deep dives even found and look through that and transcribe all the best information into the answer. And in the answer, it actually cites where it's got its information. You can just click on it and it just brings it to the source, which is amazing, in my opinion. And you get unlimited questions to follow up. For example, I followed up with, are they a category of one, which means are they the only company that does what they do? Again, it scraped the internet for all these sources, primarily the Transmedics website, and it gave me this answer. And it does say that Transmedics is a category of one in what they do, which is the organ care system that transports organs in a near physiologic state instead of instead of the old cold storage methods. Another example of this, I also asked that why did Twist gap up and almost finish 29% up on the day on May 3rd when it had its earnings report? I just asked what in their earnings report catalyzed that reaction. And it just spit out all of this information. And I cross-checked it with MarketSmith and other data sources, and it was all accurate. So I just think this tool is extremely amazing for anything you have questions about. And there's actually a plugin here too. So like, let's say if I go to a web page, let's just search NVIDIA and I go to any of these websites and I click this, I can press summarize and have this page here. And I guess it can't do this one, but pretty much let's try this one. If I press summarize, it summarizes this entire blog about NVIDIA. I mean, this looks like some complicated stuff, which I wouldn't understand, but comes out with this. And it's just a really cool tool that I've been experimenting ChatGPT, I know Sam Altman has talked about releasing GPT-5 sometime in 2024, as well as their search feature. So I'll definitely have to check that out again to see if it's better than Perplexity. But at this moment, I don't think really anything beats Perplexity in search. Connor, do you have anything to leave the listeners before we close down this week's weekend walkthrough?
Nope, just hope everyone has a good trading week ahead.
Alrighty. So hopefully you guys next week, same day on Sundays. And if you have any questions, you can email both of us at our respective Revere Asset emails or reach out to us on our Twitters. So yeah, have a good trading week and good luck to everyone.